Okay, welcome everyone. Thanks for attending today. The purpose of our meeting today is to reconvene the Technical Advisory Committee for the Resilient Community Development Finance Initiative, or the TAC for the ResCDF, as we've taken to calling them. So we have added people to the TAC. This is a pre-existing group, but we've added some new folks. So as we move into this new phase of the initiative, so we are going to start with a little bit of level setting. Then we're going to lay out the next steps for the initiative and get some feedback from you in today's meeting. So this session is identical to one that we held on Tuesday, just to clarify if you were wondering. So you have not missed anything. We wanted to offer 2 sessions of this meeting to capture a really wide audience, to make it more inclusive. And we are recording today in case you want to refer back to the meeting or you want to share it with a colleague or other partners in your work. So I'm going to just run through the agenda quickly before kicking off with some background information on the initiative. I am Hannah Vargason. I'm with the Center for Impact Finance at the University of New Hampshire. And so I'll do that piece, the intro, and then I'm going to hand it off to Hazel May Overturf at Kauai Federal Credit Union to walk us through a lender story in resilience. That will ground our conversation today in a real-life example of climate impacts on the communities that we serve as CDFIs and the role that community development lenders can play in helping communities recover from and prepare against climate impacts, like Hazel will tell us about. Then Stuart Sarkozy-Bonathy of Recovery Labs is going to walk us through the journey to resilience and all the touch points along that journey. And that'll prepare us for a breakout discussion. So we want to get your reflections on how climate risks are showing up in 3 key market sectors. Housing and consumer finance will do together, small business finance, and then community facilities and CRE will do together. And then we'll have a very brief report out from those conversations, after which my colleague at the center, Tina Poole-Johnson, will review the next steps for the initiative, and you'll kind of see the through line there from our discussion to where we'll be going in terms of this new phase. And then finally, we're going to spend a few minutes on connections between the ResCDF initiative and Greenhouse Gas Reduction Fund, right? The big, 800-pound gorilla in the room, and we're going to hear on that from Adrian Smith at OFN and Neda Arab-Shahi at Inclusive. Finally, we will have some time for questions. Okay, that's our agenda. So doing a little bit of brief history to make sure we're all on the same page. We are ramping up a new phase to this initiative. It was first launched in 2019, led by Opportunity Finance Network. Actually, again, my colleague Tina Poole-Johnson, she was at OFN at the time. And the initiative really built on a broader effort, the 100 Resilient Cities program, which was an effort to build physical, social, and economic resilience in cities around the world. And so bringing that trend into our work in community development finance. In phase 1, there was a precursor to this group of leaders that developed a vision, mission, and objective for the initiative, as well as a beta version of a tool for lenders to assess the risk and success factors for a deal with regard to environmental, social, and economic principles of resilience. You are going to get a copy of these slides as well, in addition to the recording, so no need to take all this background information in now. You'll have it for reference, as well as some additional material at the end of the slide deck that we won't even go into today, but just to give you an FYI. So the vision and our overarching goal for the initiative remain the same in this new phase, which is to accelerate equitable decarbonization and build holistic resilience in LIDACs through community development finance, meaning through our lending goals, through our financing, through our development services, our policy work, and even our organizations themselves. We could be doing resilience in our organizations with great effect. And so in this phase, leadership looks like the Center for Impact Finance acting as project manager with support from NYSERDA as a key funder and contributor to the project, a steering committee of Inclusive, OFN, Recovery Labs, and still Resilient Cities Network as a partner, and then this TAC, you. So the TAC is a large, diverse group of stakeholders, and your role is to provide feedback on the guidance, tools, and training that we are developing in this phase of the initiative over the next 4 to 6 months. You'll also serve as the basis of an ongoing community of practice, and we hope that you'll all be advocates for resilience to other lenders in our industry and beyond, and then also your community development partners, policymakers, and investors. So there are going to be various ways for you to provide feedback on the initiative deliverables, and we're going to get into that a little bit later as we talk about next steps. But I will let you know that we are planning to establish at least 2 smaller working groups, like 6 to 10 organizations that are really going to dig in on 1, impact measurement and management, and 2, tools and training. So with all that background shared, I am going to introduce Hazel May Overturf to share a story of resilience from their experience at Kauai Federal Credit Union. Hazel?
Thank you so much, Hannah. Aloha, everyone. Good morning. My name is Hazel May Overturf, and I am the Community Impact Director at Kauai Federal Credit Union, and so honored to be part of this group and also to share our story on our little island in the middle of the Pacific Ocean, and kind of how we describe it as a catalytic event of how it helped us center equity and also climate change challenges that are facing our island, being that we are an island in the middle of the Pacific. And when we give you a little context about Kauai, if you've never been to Hawaii in general, Kauai is one of the more western islands, and it is one of the wettest places on the earth. And it's funny that I'm talking to you all now this morning. We're having flood flash warnings right now. So hopefully my internet and everything stays okay. But it's something that we know that is part of our climate and things that we're facing. But as you can imagine, with climate change, it's become even much more frequent of these types of major events. And then also more severe in the terms of destruction and like property damage and on all of those things. And so when these types of events happen, because of the geographic kind of makeup of our island, there's different pockets or zones that are very much more vulnerable. And one happens to be the North Shore of Kauai. And this is, it's funny, it's one of the places that has the highest economic disparity, being many billionaires with a B, actually live on in the North Shore. But then also some of our kind of low income folks and Native Hawaiians actually have a lot of property and land up there, being it a majorly rural and agricultural. And so when these events happen, you can imagine just the fury of like things that can happen in these cases. Back in 2018, we had one of these 100-year historical floods where 50 inches of rain, I think it's a record in all of the US, fell in 24 hours on the North Shore of Kauai. And if you're familiar with that island, to get to the North Shore, it's actually a 1-lane bridge, 1 road, 1 lane, and it got washed out. And when that event occurred, our entire North Shore population, unfortunately, was essentially stranded in floodwaters, in damaged homes, without resources, without electricity, without cell service. And as you can imagine, we knew we needed to do something and to step up. Our original charter was that of government employees, which for us in Hawaii actually equates to, of course, our government employees and workers, but our police, our firemen, our lifeguards. So we saw our first responders like suffering and being cut off from the rest of the island. And we decided to take it upon ourselves to become, as we've coined the term, financial first responders. So knowing that they were in these dire straits, needing basic necessities and supplies to survive, water, food, life goes on, and they still had bills to pay, banking to do, and other things that happened despite this week-long and month-long recovery after this major flooding event. So one of the things that we're kind of known for our island, and again, it's the reason why we continue to do the work that we do, my CEO actually grabbed a dry bag, a backpack, supplies, and put the credit union on her back on a jet ski. And we went around the island and made sure to provide those supplies and needed materials to the people on the North Shore, but also knew that we had to continue banking and helping them kind of get out of this really horrific event. And so one of the things that I just wanted to mention is after that, I mentioned it became a catalytic event for us to center equity, knowing that there's these places of people with different economic strata and circumstance. We offered emergency loans. We knew that ongoing home improvement and development might be needed in order to like come back to a place of where they were before. And it's something we have to keep thinking about, given the nature, again, flash flood warnings that are happening here on the island today and ongoing. And again, continues to center our work in lending specifically to increasing access to capital to those that aren't maybe the billionaires that like may need that, but to our local community here, and also helping them continue to think through what would be helpful for them to stay more resilient and also increase access to some of these opportunities that they may not have had otherwise. So thank you for letting me share our story. I'm going to go throw it back to Stuart.
Thanks, Hazel-Mae. Really, really great. And I think starts to touch on some of what you're going to hear both in a few slides that I'll run through, but also for the long-term program. Again, I'm Stuart Sarkozy-Bonasi and the founder at Precovery Labs. Great to see so many familiar names and faces. Some of you, in fact, pre-OFN work on the tool that eventually became the beta that came through that process. And now we're moving into phase 2. So very excited to be in the phase 2 and to really be taking on this next effort. So from the very beginning, in part because of the origin story of the work, we've been talking about shocks and stresses and the combination of shocks and stresses that lead to these cascading effects. And that's the thing that makes climate as an overarching stress make the shocks worse, and pre-existing stresses that are already there, a whole multitude of them, especially for low to moderate income communities. But that's also a space that CDFIs are comfortable in working in. So to some extent, we continued to sort of move forward with continuing that combination of shocks and stress combination, but also the analyzing and taking apart the cascading effects so that we could talk about cascading benefits and things that we do to make it better. Let's go to the next slide. So without going into great detail on this entire set of definitions and spectrum, I did want to mention a few of the things that we sort of are working on to make sure that we're all moving in the same direction. And part of this is that we are so often on the recovery treadmill because of the shocks and stresses in combination and just the natural disasters and sometimes human ones. And we're trying to get around that disaster recovery mindset and move into something that we'll talk about in a second in terms of resilience and pre-recovery mindset. Next slide. So most of the world, not enough of it in the finance space, has moved to mitigation finance. It's still moving too slow because that mitigation is what stops the changes that are occurring, at least in terms of the climate efforts that we're talking about. That doesn't include things like poverty, pollution, and other things that are part of that climate change, but also contributors that came from longstanding ways of working and running. It doesn't move the equity conversation necessarily. So we want to be sure that making it less severe because we're working on mitigation continues, even though we're behind. But also, and this is where it gets to the next slide, we want to make sure that the industry, CDFIs and others, are moving to adaptation because we are already behind on that. And if you look at the market scan that we've done, if you look at the sort of general sort of trade papers for resilience finance, the adaptation piece is so far behind that we're at this point of really having to change the whole system to kind of catch parts of that up, even as we continue to do mitigation. And that's the trick of this, right? So building the resilience side of it. Next slide. So what we're really shooting for is this, not just survive, not just adapt, but to thrive. And for CDFIs, of course, the history is that means economically, socially, equitably. But what we're now doing is making sure that we're coupling this resilience piece to it, and that resilience finance and climate resilience, as the decarbonization piece goes, contributes to this greater whole. And that thrive part of it is the hardest to get to because essentially we're asking CDFIs and borrowers and others to pay for things that haven't happened yet, but we know that's increasing and it's continuing to get worse. Next slide. So this is just a very short glimpse to a very long market scan. And I have to say that Alyssa Ahern, who's on from Resilient Cities Network, was very much a big part of this with me. This is just a scatter graph that we kind of broke down into small pieces so that you can see globally the kinds of funds that are on the axis from recovery all the way over to resilience and full resilience, and also from grants down to equity and debt. And part of the reason for doing this is that we know that the two yellow dots are where federal funding, the recovery funding, and the standard funding sort of fall on that scale. But if you look at the big blue dot down towards the middle left, that's the CDFI sector, primary lending, and still very much in the standard or into mitigation. And we want to move that blue ball, the planet of CDFIs, to the right. We want to bring it up and over to the right and keep moving, right? Because we need that, and now termed often as blended finance, right? We need the capital stack for mitigation and adaptation and full resilience to come together, right? Inside of CDFI, but also in all the other funding and financing sectors. So this just gives you an idea of like what it looks like globally. You can look at it in more detail because it's quite small, I realize. A couple of things to point out. The Green Climate Fund, which was meant to be a global fund for mitigation, still sits kind of to the left of not moving towards adaptation. But even at a global scale, that fund is being pressed to move to the right as well, because we do need to catch up and we do need to be safer. And then the RCI funds, which Allison also worked with me on at Resilient Cities Network, you can see it in the far right corner. Not everybody's going to get to like full resilience or full grant making, but we need to fill in that right side of the scatter graph, right, more deeply along all of the spectrum. So this just gives you kind of an idea of what when we say let's move to recovery to full resilience and have the full spectrum of grants to debt and equity, venture capital as well. All compacted into the right sort of spaces and filling them up so that we're doing the right work together. Next slide. So you heard from Hannah, we are now working on trying to move from just this kind of conversation around the risks and the shocks and stresses and some of the goals, and moving the goals and objectives into this phase of the tool so that the tool in some form or tools is in an indicator, metrics, and data area, and that we're thinking of strategies that CDFIs, their partners, their funders, and others, and governments that sit next to them, right, move us, in fact, on this chart over towards the right-hand side. And we're going to start today with a short exercise and breakouts to start to take this apart a little bit. But all of you will join us kind of in a fleshing out of versions of this for other areas, including beyond housing. We just use this as an example for you to start to look at, and even this is not complete. And so we're going to spend some time and do that, and I'll pass it back to Hannah to give us the instructions on that. But very excited to have everybody give input to this and move us along.
Thanks, Stuart. Thanks, Hazel May, again. So yeah, we are going to go into breakouts into the three groups I described. I'll reiterate here in a moment as well, to discuss the questions that you see on the screen. And Stuart, Tina, and I will facilitate. We'll have these questions. We'll actually share our screens as well and try and capture your feedback and come to a little bit of agreement in the time that we have. We'll have about 12 minutes in small group discussion, and then come back and the three of us will report out. So don't worry about that. So again, we're going to have one group in housing and consumer finance led by Stuart, a second group in small business led by me, and then a third group in community facilities and CRE led by Tina. So we had a question on Tuesday about kind of like where affordable housing would go. I would say probably community facilities and CRE if it's a larger project. If it's small, like 1 to 4 unit, maybe you want to go into housing and consumer finance. So I'm going to open up the rooms, and while we get situated and everyone, zooms through space and time, go ahead and introduce yourselves if your facilitators aren't there yet, and we'll meet you there and start the discussion. Okay, you should see all rooms open and you can self-select, obviously.
Sorry, how do
And flagged specifically impacts on food supply chains, fisheries, and the tourism and recreation industry. And just a couple other things to flag that didn't really fit into any of our questions, but are important is that there's this increasing capital access challenge, which I think we all know as CDFIs, as banks continue to pull back, or in certain places they do. And then also there's a pullback on insurance coverage, which is really important to note. And then we talked about some opportunities, which was great. So we don't want to miss the opportunity to build out a domestic supply chain, to build local wealth and workforce. And we also want to capture the climate migration opportunities for some communities. And this is also a chance to drive more traditional land conservation, which I think is also reflected in the comment that Olivia posted. Back to you, Tina.
Great. So trying to just say things that are additive to what you all just said. So we had a great conversation. A little bit of a reality check. Esther said, well, what about the Greenhouse Gas Reduction Fund and all of the standards and reporting and compliance that's going to be required there? And, are you going to be mapping to that project leveraging? And we said, absolutely. And that we're going to have Netta and Adrian, two of our steering committee members, OFN and Inclusive, are going to be talking about that shortly. We talked about a couple harms, threats, flooding, and then also the needs of some communities to actually move their community, being in locations that are no longer tenable, as being real issues. We talked about how, particularly with the Greenhouse Gas Reduction Fund, there's going to be a lot of pressure to, I forget who said it, in somebody's words, to basically slap solar on every roof that can hold it. And that while we all, I think in this room, virtual room, believe in solar, particularly with storage where appropriate, there's many more things that we can do. And so John Egan was talking about a project that he's about to do, working on with the Housing Authority, and that he's bringing building scientists and a progressive architect to look and see what is the best building science to really be able to do more with those GDRF funds before putting on the solar. So just want to say a little bit, sort of bring it home before we turn it over to Netta and to Adrian to map us to the GDRF. So Hannah, I think, really set us up well at the beginning of the call, but just to reiterate what this project is about. So we have been doing, and you heard Stuart talking about our market scan. We've been, and when I say we, Hannah, me, Stuart, Allison, shout out to Allison and Jordana from RCN, and a couple of really smart graduate students have really been in the weeds of looking globally at tools and pools, as Stuart likes to call it, but also doing a lit review. And we're almost done all of that. Sadly, there is no one definition for resilience. There's no one tool that we can just adopt and move on. So the two other pieces that we're going to be working on with the project moving forward. The first we've already mentioned, but just to say again, the goal of this project is to design, develop, and then, proselytize about a practical, actionable impact measurement framework that CDFIs, green banks, other mission lenders, and their partners can use to guide their investment of both GDRF resources, other resources, but also staff time in making sure that they are furthering their decarbonization goals, but also their original primary goals that most of them, at least on the CDFI side, community development, economic development, et cetera. So we just had the first sort of conversation that we will continue later this month and in June and during the summer to really work on the impact measurement piece, which is a piece that we did not really dig into in the phase one. In the phase one, we created this tool. John Egan and the folks at BBIF and Kim Pate and the team at Indian Fund, there are some organizations that have really adopted this tool and actually advanced it, and Indian Fund in particular has really operationalized resilience through everything that they do, and has a grandchild of this tool that they're now using. But it's we've gotten a lot of feedback that it could be more user-friendly, and that it would be helpful to take this tool, which is really intended to be used at a capital moment when there is a really baked project. It would be helpful to have a due diligence checklist, to have a structuring tool, to have the impact measurement piece. And so we're going to be working with you all and with the working groups. So, and you all, again, are very welcome to participate in those working groups to really dig into creating these tools and standard operating practices, because there's not, unfortunately, even after we put together the tools, there won't be one answer, because building science keeps evolving, the climate keeps evolving. So just to iterate a couple important pieces of our theory of change. Again, we're trying to figure out a process and standard operating procedures that will allow lenders, again, in development services and portfolio management, as well as at the time of origination and underwriting, to really look up from the loan package and look at around the community and figure out how to, what the risks are to the project from climate shocks and stresses, but also from other pandemic, economic shocks, plant closing, whatever those possible shocks and stresses are, and to figure out how to build resilience, not just through insurance, as important as that is, but through actually affirmatively adding things to the project that might build the resilience of the project and the financial sustainability of the lending organization. Tool not screen, meaning we don't want this to be screening out deals. We want it to be helping to surface opportunities for building resilience. Really important. The first phase was an iterative process that was driven by thought leaders and practitioners. The forerunner of this technical advisory committee, and also a working group of CDFIs, CEI, Self-Help, Looking at You, BBIF, Indian Fund, Enterprise. And really importantly, we want you to hold our feet to the fire to make sure that this is practical, actionable, and is furthering your work on GGRF, but also your work generally. We want it to be about the good kind of value engineering, that we're actually putting in requirements, if it's a requirement, that whatever we're doing is furthering the goals of everyone involved, and that it's not any sort of obstacle, and that we're not taking things out because we can't afford them. I think that's yeah. So I just wanted to put again the vision up for you. I just wanted to reiterate here that while we talk about recovery and then mitigation, adaptation, resilience, really what we're trying to do is get to environmental justice, because without the justice piece, the equity piece, there is really no true resilience. And this vision is what the TAC and the CDFI cohort in phase one developed. And I wanted to just share it again with you all so that you see the emphasis on making sure that all people are able to reach their full potential, supported by equal access to responsible capital. So I think now, Hannah, we're turning it over to Netta and to Adrian.
Yeah, Adrian's going to kick us off.
Hi, everyone. Good to see you. Adrian Smith, Opportunity Finance Network. I am talking a little bit about GGRF and how it relates to this project, and then I'll hand it over to Netta to kind of reiterate some and extend what I'm saying. So on GGRF, OFN's goal is to provide capital and technical assistance to mission-driven community lenders and to build their capacity to invest and reinvest in projects, activities, technologies that reduce greenhouse gas emissions. So most of our funds are pass-throughs to the CDFIs and community lenders for them to lend into projects and to provide technical assistance. We're also going to be providing technical assistance to nascent lenders. So I know everybody's curious what's going on, right? So we want to just do a high-level update on the GGRF state of play. OFN, as our other GGRF recipients, are still in negotiations with the EPA, and we expect to finalize the grant agreements with the EPA in July. So we're still doing a lot of discovery, understanding, negotiating the changing requirements with the EPA. Another thing we're doing a lot of, which Netta can explain as well, is we're doing a lot of coordination across the selectees, the other Cs. So OFN's coordinating a lot with Inclusive and other CCIA selectees, as well as the NCIF recipients as well. And finally, another big thing we're doing is building up our internal capacity to support lenders and doing that ecosystem building that will be, or laying the foundation for that ecosystem building that will be a big part of GGRF. And I'll keep it brief and hand it over to Netta.
Okay, perfect. Thank you so much. Kind of similar to, but slightly different from OFN, Inclusive's program will focus on capital for lending plus technical assistance grants to community development credit unions. A heavy focus will be on financing home improvements, 1 to 4 family home improvements for energy, energy efficiency, clean energy, and also financing electric vehicles and electric vehicle charging stations for individual consumers. So our focus is national, and like Adrienne said, we're all the different groups that have been selected for the different GGRF programs, we're trying to coordinate in different ways. I think a big piece that we're hoping will be kind of built on each other's programs is that each of the selected groups had much bigger plans for kind of the market building and the market transformation. I think individual kind of energy projects only go so far, but actually using those to transform clean energy markets and create lasting access to affordable and accessible clean energy financing will require work that goes beyond any of the individual selected groups or individual lenders. And so the coordination conversations that have been happening between the different selected groups involve kind of how to best use the limited GGRF funds that can be allocated for that, which is, I think it's, for most groups, it's less than 5% of the funds can be allocated for that market transformation. How to use those in a way that's building and additive and kind of like engaging of local community groups, local communities, local community members. And so the way I'm thinking about it, and I believe the other selected groups are thinking about it, is that we have a lot more work to do in that area. So today's conversation is very timely because it helps to think about, what's happening on the ground with resiliency around the country that may be important to think about when planning. For example, in our group today, someone mentioned insurance is a huge challenge. Well, I think insurance is a huge challenge for a lot of clean energy and energy efficiency projects as well. And are there sort of systemic centralized market transformation approaches that could help to make that path more smooth? I think I will leave it at that. I'm happy to answer any questions, and Tina, Hannah, let me know if there's anything you wanted me to hit that I didn't.
Okay, thank you both so much. Yeah, so DGRF is really ambitious, and then that does not even include our own economic development goals, and these goals around resilience. So what's valuable is that we already have this table set for knowledge sharing, for building shared infrastructure together to hopefully reach these ambitious goals more effectively, more efficiently. And so we are just going to be, doing this mapping moving forward as we start to really refine what GGRF is going to look like. So, we will plan for our tools from the initiative to help lenders access GGRF funding and to, maximize the impact of those dollars, those investments. And specifically, we'll be thinking about touch points between the initiative and GGRF in terms of standardized metrics, the reporting requirements, which we've heard, and then obviously prioritizing eligible projects. So we have just a few minutes left, and I'm going to just quickly discuss next steps and then open it up for questions, and we'll hang on to answer your questions, or if you want to drop off, obviously that's fine. So what we'll do from here is share out the slides, share out the recording, and articulate next steps in an email as well. And you'll hear a little bit now about the specific mechanisms to provide feedback, but more will be coming. Tina, do you want to add anything? And if maybe folks want to start to raise their hands virtually or even drop questions in the chat, we could follow up.
Yeah, just while people, so we know you're all incredibly busy. So just please know, that the minimum we're asking is a couple of hours at meetings like this periodically. We're happy to meet one-on-one. We're happy to get feedback by email. We're happy to be referred to other people in your organization if that person is the right person for a particular, feedback on a particular tool. CEI's out in force today, for example. We appreciate that, but don't expect you all every meeting. So yeah, more to come. But if there's any questions now, there's been a robust chat going on, which we will save.
I don't see any virtual hands, and I don't think I see any real hands either.
Can I ask a quick question?
Sure.
How much are you guys thinking about this tool sort of aligning? There's a lot of tools development going on, I think, and a lot of folks are, in a good way because of GGRF, but HPN to, a lot of other folks are trying to create things to work with their members, or whether it's, NeighborWorks and some intermediaries. I know HPN Enterprise and RMI have created kind of like a decarbonization hub. And then there's also this sort of like tech enabled solutions that a lot of folks are thinking about, whether it's from like Cadence 1.5 to potentially Store tool. Are you guys thinking about connecting into some of those existing kind of platforms and things that are happening from like from the tool side to make sure that that there's some overlap?
Yeah, so as you know, Esther, we held a convening in April of GGRF recipients and some of those, key players in those coalitions. We had a whole session on tech and data. There's actually a working group emerging from that conversation, so that we are a part of. So we'll be closely connected to that whole network of tech and data players. And so, yeah, we'll try to make sure that these are integrated, is the short answer.
Yeah, and Esther, I would add to, it doesn't show on the scatter graph, but inside the market scan was not just the pools side of it, the funds, it was also the tools. And frighteningly so, there's like a tool a week that comes out, or there's some version of another like checklist or something. So that list was incredibly long and comprehensive, and we're trying to make sure that there's some crosswalking there. What we are, I think, really focusing on is, and it came up in the great breakout groups, is that intersection of adaptation and mitigation, and making sure, and we heard from the groups, that the non-cookie cutter style of the tool, works in Hawaii at the credit union, but it also works in the Gulf Coast, but also works in the Northeast when we're talking about solar in a very different manner. So, and that goes down to things like our conversation about cesspools and septic tanks and pollution, right? And how those all intersect. So for sure.
Awesome.
I think we're out of time, and I know everybody's really busy, but yes, absolutely, we want to leverage and to fill in the gaps and to use you know, the momentum that we have here with all of you and with the funds that we have from NYSERDA. We didn't mention it, but we're going to be putting together a training course, and we're going to be doing other online resource centers. So we want to know about other efforts. We want to link to them and leverage them and promote them. And then, you know, be the glue or fill the gaps or whatever is needed. So thank you all for your time today very much. Be well, enjoy Memorial Day weekend, and look forward to talking with you soon.